Buying a home in Arizona can be really confusing, especially in 2026. Most people think that you need huge income, massive down payments, and perfect timing. But the process is actually a lot simpler than most people realize. So in this video, I'm going to break down how first-time buyers actually buy a home in Arizona here in 2026. Before we get started, my name is Michael Zarch. I'm a realtor here in Arizona, Phoenix, Tempe, Scottsdale. My mission is I help first-time buyers and young professionals get into ownership by going from renting to owning. Anyways, let's get started. Okay, so to start, we'll go over the biggest misconception most people actually believe. Well, sorry, not most people, but what I've gotten a lot, especially from younger people, is that they think they need the full price of the home saved up. For example, say you want to buy a $500,000 property. Some people think that you need $500K to buy that property, right? Well, I need $500,000. I'm only $500,000 away, right? That's a big, big lie. In real estate, you get leverage, so financing, just the same as you would use student loans to go to school or car loans to buy a car. You get financing to buy a home. And in Arizona, you don't actually need 20% down. Is that ideal? Yes. Strive for 20% down. You could avoid PMI, which is an insurance that you're going to have to pay. But in Arizona, the main point is that you can buy with 3 to 5% down, especially with an FHA loan. This can be a very, very smart move to get into ownership. It allows the entry to be much easier. Again, you want to be smart and strategic because, with a lower down payment, you might have the interest rate being higher, but the goal is to get into ownership, and you can do that with 3 to 5% down of the purchase price of the home. And briefly, I'll go over what this is called. It's called leverage. So leverage allows you to control a much larger asset, being the home, with a relatively small amount of money. It's one of the biggest differentiators of real estate investing and why real estate is one of the biggest wealth builders, especially over time. Okay, so next we're going to talk about the 3 simple things, or the main things that the lenders, so the banks, will look at when lending you a loan. Number 1 is stable income. They care about the stability of your income. If you're a W-2 employee, so you work with a salary, they like to see that because you have stable income that's more predictable. They like predictability. Compared to if you are a 1099 or self-employed, it's a little bit harder to predict stable income. But as long as you have income, you're fine. Again, 2 years minimum, but you can get away with like 6 months to a year with stable income. Number 2 is your credit score. Credit score is very, very important. If you're young, in your early to mid 20s, start building your credit. Do it wisely. Don't destroy your credit, but you want to have strong credit. So if you can start doing that now, that is one step you can do today to get into ownership in the future. 620 minimum, but we want to be closer towards the 700s. 720 is also ideal. And the next, lastly, is down payment. So down payment, like I said, 3 to 5% of the purchase price. But there's also, other closing costs. So closing costs can also be 2%. I'm not going to sugarcoat. It's not just a down payment that you need. Closing costs are important. There's also insurances, property taxes that you're going to pay. So, and you want to have you want to budget safely. You don't want to just spend all your savings on a house. I would be the first person not to tell you that. So just know that capital is important. You want to have a sizable amount of capital. So like I said, 3 to 5% of a $500,000 property. You're going to want to have around $30,000 to $35,000. I'm just roughly eyeballing it to be safe. All right, that's not what you barely need to get into ownership, but that's to be comfortable and safe. Next up, we're going to talk about what lenders really actually look at when talking about income. A lot of people think that it's just all about income. If I make $500K a year to $1 million a year, I'll be perfectly fine. But the reality is that the lenders look at the margin of your income and expenses. That's the gap between what you make, what you're bringing in, versus what you are spending, what's leaving your bank account on a monthly basis. So if you have student loans that you have to pay back, they look at the monthly basis, what you're actually paying on a monthly basis. So if car loans are taken into account as well, your credit cards, how much your rent is, and then the mortgage. So if your debt is low, but your income is higher, you're going to qualify for much more. This is what they look at to see if you qualify. Again, you can make $500,000 a year, but if your debt is so high, you're not going to qualify for much. So remember, if you're in your early to mid 20s right now, you can start restructuring your debt, saving more, making sure that what you leave your bank account is not as much as what you make. And that is going to be your entry into buying a home. Number 4, what we're going to talk about here is the first-time buyer advantage. Here in Arizona, there's a lot of advantages that allow people to get into ownership much quickly. So first time buyer advantages. Again, people don't realize that the government, they want people to buy homes. It's really, really hard. I get it with all the things that's going on with the economy, but when people are buying homes, it's much more predictable and stable within communities and areas, and then the economy flows much better. Anyways, let's get going on first-time buyer advantages. Again, there's a lot of first-time buyer programs that you can have low down payments. Again, we got to be smart about this. Just because it's a low down payment doesn't mean that the prices are going to be low as far as interest rates on a monthly rate. But there's different programs that you got to talk to different lenders. If anyone needs help with lenders in Arizona, reach out to me. I can refer you to some great ones. But there's a lot of good programs to help you qualify much easier. And the next thing I really, really want to, instill in people, especially in your young early to mid 20s, even late 20s, is that the goal should be to get into ownership. Get into ownership, not to buy your dream home immediately. Yes, strive to buy a dream home eventually, but get into ownership is very, very important into owning assets, because what you own is more important than what you earn. That's how you build your net worth and have flexibility and control long term. And what I mean by getting into ownership is sometimes you may need to buy, the starter home, the condo. New construction townhouses are very, very, very good because the rates are much better. New constructions, they just built their new homes, and they want you to buy it. So they're gonna offer discounts for you, especially here in Arizona, Mesa, Chandler, Gilbert. But again, look at condos, look at townhouses, look at starter homes that fit your budget, that look like a good rental area with a high return of investment. Maybe you have to live in it for 1 year with roommates. I know it sucks, but that's how you have to get into ownership. And your roommates can offset your payment, and then you can move out, completely use that as a rental with positive cash flow, positive net cash flow, and then continue to build up in your portfolio. So the number one point here is that buying a home usually isn't decided the year you buy. It's decided years before you buy, especially here in Arizona. In Arizona, there's so much opportunity, so many different, communities being built, areas to live in. Chandler, Gilbert, Mesa, they all have nice downtowns. Obviously, we all know about Phoenix, Scottsdale, and Tempe. There's a lot of options here in Arizona. It is kind of a buyer's market right now in March 2026. As long as you position yourself right now, so in a year, 2 years, 3 years, you are ready, you know what you need to do education-wise, and you have your habits ready to go, then you may actually be ready to buy a lot sooner than you think. The habits and decisions you make today financially is going to dictate when you get into ownership. If you're in your early to mid 20s, watching this video, I talk about that a lot because that relates to me. Do you know how many people I've talked to that are older, 40s, 50s, 60s, that have said that they wish they would have done this earlier when they were younger? A lot of people. You have the conscious decision today to actually make those decisions so that in 5, 10, 15 years, you have much more control, flexibility, and freedom, and that starts by owning assets with owning a house, and you can get into ownership a lot quicker than you probably think. Anyways, if you're in Arizona and you're curious about what the numbers may look like for you, no matter your situation, no matter your age, no matter how much income you make, it starts with a conversation and thinking about it. Feel free to reach out to me. I'll put my phone number and my email in the description. Shoot me a text or DM me on Instagram at the Michael Zarch. I'll reach out to you. I want young people and people who are in their 30s, 40s, anyone to start getting into ownership, building assets, and it starts by having conversations. Thank you for watching.